Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, November 15th, 2019. I wanted to just get a few trade ideas out there, update on a lot of the things I've already posted. Might have a couple new ones in here, and just wanted to give you guys some actionable or potentially actionable trade ideas as we head into the weekend. Now keep in mind it's Friday. I'm not a big fan of taking new positions on Friday, but I'll start out here with PA. I mentioned I've been short this one for a while and continue to hold on to it. My goal right now is to press this as a swing trade, and I passed it along as a trade setup last week. I started working on an update today, got sidetracked on some other things. And let me show you that chart. I was going to post it as an official trade, and I still may do that. But again, official, unofficial. If I like something, I'm going to cover the chart, show you where the levels are. It's just sometimes a matter of having the time to get there and mark up all the levels, identify exact price targets, entry points, adjusted stops, beta adjusted position sizes, screenshot all these charts, get it out to you guys. You can tell today I'm trying to catch up on a lot of the old trade ideas that have already either hit targets or been stopped out. There's still a lot of those showing on the site as active, and as I always say, go off the most recent notes on those trades. If I have not modified a stop or a price target, changed it, pulled the trade in early, those are the criteria for the trade. And again, if something hits the final target, up to you. If you want to trail up, I usually share my thoughts as if I think there's going to be the potential for more upside, in which case what I'll usually do personally there is maybe just lower stops to slightly below where it is when it hits the final target on the trade and let it run. That way if it reverses, I get back a little bit, but I'm still in the trade, and it allows the old cut your losers, let your winners run kind of rule in trading. And then in a lot of the trades, I'd say a good majority, I expect the final targets where I expect a meaningful reaction or reversal, end of the trend, and then I'll usually jump out. So again, I'll work on over this weekend, if not into next week as well, updating, getting all the trade ideas in the right category. So if you see an active trade or trade setup, it's still an actionable trade. And all right, let's just jump into this. So here's the earlier today when I started to compose that post. I still have it. I'll finish working on that later. Maybe get out next week since it's late in the day. Palladium futures. We've been working up this nice clean up trend line lately. Remember, we broke down, and this is a 60-minute chart. Again, screenshotted earlier today, this morning. Broke down, had an impulsive breakdown of the 60-minute trend line. Little bear flagging action right there. Broke down from the bear flag, impulsive leg down, and then we've been setting up in what could be a larger type. It's certainly whether it's a little too big to be a bear flag, a larger flag, using this entire thing here is the flagpole. If you don't know what I'm talking about, bear flag patterns are continuation patterns that occur, with three components. You have an impulsive leg down, followed by an area of consolidation, which takes the form of a flag. Sometimes you get a bearish pennant shape there, followed by a break with a pattern. So they're continuation patterns. Now, you might say this was an initial flag, with this being a flagpole, though it's a bit large. But whether it's a flag or not, whether it fits that criteria, and again, in my opinion, it's a little large to be a bear flag. What you cannot argue is that there's not a very clean uptrend line here, which there is. So again, that's been broken now. You can see there's some supports. I've been a little hesitant on adding Palladium as an active official short trade for a swing trade. I try to keep the official trades not very quick, nimble, in and out. Never a day trade, at least not on purpose. A lot of the swing trades I post over the years will hit a final price target, or at least an initial target, the same day it breaks out, because of the explosive nature of many of the chart patterns I trade, like bullish and bearish falling wedges and things like that. But with that being said, the official trade ideas, which are always on the front page, have the specific targets, entry points, all that stuff. Those are typical swing trades, sometimes longer term trades, which I'll put in a long-term trade category if I think the trade's going to last months, maybe a year or more. And then regular swing trades are usually holding periods measured in weeks, sometimes months. But it varies. It can take a few days. It all depends on the nature of the security. Like natural gas, those trades usually last a few days. We're in and out. We get 10, 15% on UGAS, DGAS, whatever it is, and then move on to the next trade. And so again, it'll vary, of course, depending on the security and the chart pattern. And then finally, to that point, A lot I get the question all the time. I'm not an options trader, but I know a lot of you guys are, you guys and gals, and I'll usually share my thoughts. And if I don't, if you can't tell from the chart pattern or what I've said on the trade idea, whether it's official or unofficial, just ask me. And if I have an opinion on when it will get there, I'll let you know. Keep in mind, if I give you a trade setup, it's XYZ is working its way up within this wedge pattern like this, and I have a target down here. Well, until it breaks down, I can't, even assuming that it does, I can't really give you an estimated time frame. I can give you a rough estimated time frame, but that'll be based on if and when the trade triggers an entry, because a wedge, just like the markets are wedging higher, they can continue to do that for days, weeks, or even months from now, before even assuming we'll get a sell signal sooner or later. Nothing goes up forever. Just wanted to point that out, that once a trade triggers, some trades I can tell you, with a pretty good degree of certainty or range there, when I think if and when the targets will be hit. All right, let's move on. So that was earlier today. Let me show you what happened to Palladium since. It did break down, pretty impulsive so far. So I'm sure there's probably some in or following this trade. Palladium futures, that's as I mentioned, there are some micro mini contracts. PAM is the symbol for that. But interactive brokers, for whatever reason, I queue that in. It doesn't come up, so I don't know. I've been meaning to contact them in case I want to layer into this position and not get too heavy. Each contract, a PA, you're exposed to about $167,000 per contract. That might be a little rich for some people's blood, in which case then you use PALL. Nothing wrong with this. It's an ETF. You got to watch the spreads. Best to use limit orders if the spreads aren't within 1 or 2 cents. The spread meaning the difference between the bid and the ask price. Always check that. But it is an ETF, so it's going to track the price, and it's holding physical palladium as well. So unlike I don't want to digress, but some people say, oh, be careful with the certain, and there are certain ETNs, and they don't hold physical oil, natural gas, things like that. So they can and have blown up. We had a blow up in a VIX ETN last year, I think it was, or VX, what was it? I forget which one, VXN or one of those, actually blew up, went away, because the VIX had such a big move and it had conditions in there, and guess what? You lost all your money, or most of it, if you were in that one. So usually not an issue. I just wanted to say this is a relatively safe and convenient way to play rise or fall in palladium prices, PALL. And the basis for this trade, the setup was posted here. We have this price channel we've been walking up within. We have negative divergence, or had negative divergence at the high. We broke down, back tested. In hindsight, I'm kicking myself. But again, it's more. I've seen a lot of divergences and breakdowns, and Palladium really didn't. They bought it up quick. And there's been supply imbalance. I did a lot of reading up on this recently. There's been a supply supply imbalance for it, and so in the futures we're just getting bought up. But that doesn't last forever, and as I've showed you in recent videos, the trend in palladium, if you catch a major top, you're talking 50+% easily to catch the next downtrend. The uptrends are just as powerful, but it's been in one of those uptrends for a while, one of the strongest uptrends in years, if not ever. And so again, just from a simple technical perspective, let's put aside all the supply demand stuff, and you can see the technicals are playing out pretty well. Trend line breakdown, back test for on the third day, put in a little doji stick followed by an impulsive leg down. Then we kick back, and I think on the last update I did mention too that it would be an objective short, either up to this is a resistance zone, former support zone, 161.26 up to 163.65. And that's you can see the support right there, or resistance now. Boom, we hit it, closed perfectly. Look at the candle, that body right on there. So failed to get through it, and now we're moving back down. And as I showed you there a minute ago on the futures, we've undercut that, and you can see it here. I'll give you the same trend line here on the ETF. So there it is. It's Friday, so we'll let the day finish. And what I'd really like to see is some evidence of the market rolling over Nothing. We don't even have that anything close to, well, close. We do get to have those trend line breaks. We're still below those trend lines I highlighted yesterday, but there's still those price support levels just below I'd like to see get taken out. Plus, I'd like to see some type of bearish candlestick in price action mixed in there as well. Because when you have a resilient trend, give it the benefit of the doubt. Don't fight it. And if you're going to take a short, like on the markets, for example, you want to see some evidence. And where I'm going with that is, the stock market's indicative of the economy. And palladium, the palladium, it's a precious metal, but it's really more used in industrial applications. I think it's 70-something% of the demand, 75% or so, if I recall correctly, is in the automotive industry. It's used, in emissions. Emissions like catalytic converters and those type of things that allow vehicles to have cleaner emissions and pass those tests, the requirements by the various governments. So that's it. There's a breakdown. There's my next target right there. Obviously it's going to help if and when it takes out the recent previous reaction low there. So that would give you to that next target about a 4.5% drop, and then down here to the target after that about 147. That's about another 8%. And based on what I'm seeing here on the longer term charts, there's a potential for a lot more. Here's a chart. This is when palladium really started to take off, right around the beginning of 2016, and this ETF is up 267%. And again, that's been one of the strongest trends in a while. But these technicals are really clearly bearish to me. Now, when I say that, the trend, yes, is bullish. There's still a bullish trend, and we're still above this secondary trend line here on the weekly chart. But what we have here is a uptrend line right here. It was broken at this point. We had a healthy correction right there in palladium, right? And then we came up, we overshot it a little bit, but that trend line seems to be coming into play here as I extend it with a breakdown again, a back test, back test, back test, boom. That was a little overshoot. And here's your divergent high. This is negative divergence right here on the weekly chart, and we haven't seen that in a long time. So it's those when I get negative divergence on weekly charts, whether it's a stock index, an individual stock, an ETF, a sector, these are and divergent lows. I love divergent lows just as well. There was one right there that told you, hey, heads up on palladium. Looks like a major trend change coming. That's where I like to position for the trend changes. So that's why I'm giving this one a little room right now, and I think there's a good chance it'll go on. Whether or not we get a reaction here, there's always a decent chance for a reaction the first time you hit a trend line that hasn't been touched in a little while. But if we break that, I think palladium has a good amount to fall. And then more so, I'll kind of play this one by ear. If that happens, and we're heading down here towards this reaction low, about 123 or so, and the stock market has put in some pretty good sell signals and looks like it's trending lower and will continue lower. That's showing economic weakness, because as soon as the economy starts to slow, they've been making a lot of cars for a long time. I could sit here and talk for days and days about the fundamentals behind that. Read article, do a Google search on 7-year auto loans. You'll read some recent articles, either Barron's or Wall Street Journal, how we have this surge in 7-year auto loans that we didn't have before. Usually max car loan was 5 years, because you're upside down. You buy a car with a 7-year loan, you're guaranteed to be upside down. But what's even worse is because of this excessive risk-taking and free money that the Fed has created with easy money. You have tons and tons of people coming in underwater on their existing car, going to buy a brand new car, and the automakers are more than happy to take the old car as a trade-in, even though they're underwater, roll that difference in. You have people coming in $10,000-$20,000 underwater on their previous car, or even 2-car purchases, rolling that loan into the new purchase. And they've got, one of the articles like showing one guy's got a $40,000-$50,000 loan for a $20-something thousand car. It's criminal, I think. But again, that's where the regulators fall asleep at the wheel, and this is what excessive easy money policies do. They did it back in the housing bubble. They did it back in 2007. Anyways, I'm going on and on. But where that's going is, There have been, you look around, I don't know where you live, everywhere I drive within Florida, I just see new cars all over the road, many, many more than in recent years. You don't see clunkers around anymore. So what does that happen? There's going to be a long-term drought and recession for the automotive industry. And so, and where I'm going with this, Palladium will, of course, it's going to track right with it. I easily see the potential for a 50% or more drop from here. So that's enough talking about one potential trade that might not even pan out. And again, like I said, at least I'm going over it now because we do have the next sell signal. That was the first sell signal here in the break of that level. Second, or next, our first objective short entry with the next objective short entry on the back test. Then when we broke the support right here, and then most recently when we back tested that broken support, which then becomes resistance from below. And then today on the breakdown, as I just showed you, below the trend line there on the futures. There's quite a bit of support coming up. So again, watch it next week. Might add that as an official trade, but official, unofficial, you can see my targets right here, support levels, all of which I'll be targeting. And the way it works, it's pretty simple. If and as each level breaks, then that increases the chance you're going to go down even more. So right now, based on the pattern, I do think we'll most likely break it. I'd have a lot more confidence if I could see the stock market start to roll over, even though, again, there's kind of a conflict of not interest, but conflicting analysis. This is a precious metal, and the precious metals tend to rally when the stock market goes down. But I believe I did in a recent video, I showed you past rallies and bull and bear rallies in both gold and palladium, and there are times, or palladium, and there have been times where gold rallied and palladium fell. So let's move on to the next one. Either way, there's some targets and levels to watch. And so I guess we'll just touch on gold and the precious metals recently, since I've been kind of harping on those lately. I don't have hard buy signals or high convictions, as you guys probably tell from my recent videos, but I have been pointing out my preference, to move some money into precious metals, the risk-off assets, treasuries, for the cases I've made before. And I guess there's always people coming in new to the site or members that haven't caught up. So the case for long and treasury bonds was made largely, but not exclusively, based on the fact we're fallen to this support level here. Is that the one I want to show you? No, I want to show you the weekly chart on TLT. There it is. We have a trend line, a long-term trend line that comes off the beginning of 2011. So it's a multi-year trend line. That trend line was broken back here, giving you a major sell signal on treasuries. We walked our way down after breaking. We had an impulsive drop. And so that trend line, when you project it forward, comes in right here. I put a higher weighting on this uptrend line because, that's a trend line that's been traded through now and since, but sometimes you do get reactions. And so there it is. We had that uptrend. We fell to that. Quite a correction. And so, like I said, at the very least, I'm looking for at least a near-term bounce, and it meshes with what I'm seeing, the market getting frothy. Correction, I think, is coming soon. We just need those sell signals, and so I think there's going to be a little more upside in treasuries in the near future. And if nothing else, it's just a way to diversify. If you are, I know some of you guys are short the market. I've seen the posts in the trading room, and that's fine. And you can take treasuries. They're gonna, sometimes there's a direct inverse correlation with the stock market, and other times there's not. And then here's a good example, and this is what I like to see. Treasuries have been moving up recently since I pointed out those divergences and all that. Here's 60-minute chart, positive divergences. We've been walking up along with the stock market, so that shows you somebody's buying treasuries. Maybe it's the smart money saying, hey, the stock market rally is getting ahead of itself. Maybe this is just a dead cat bounce, but either way, a technical case was made, and they are moving up, and that's also adds to maybe a red flag there in the stock market, the fact that initially treasuries were dropping, but lately they've been rallying. And so that's one area I'm watching. Let me show you ZB. I know some of you guys trade ZB like I like to trade, and this is ZB right here. So there was really a bottom right there. There's a support at this point, a divergent low, and we've been walking higher, very close to my 159 target now. We were yesterday. I think I pointed that out. We reversed just shy. You had a little minor trend line off the lows, but so far they seem to have bought up treasuries pretty aggressively. Not aggressively, but it had a little hiccup. Nothing goes up forever, and we're kind of holding up here. And so near term, if the stock market were to pull back and hit those correction targets that I have, we'll probably see treasuries come up here to maybe that 161 level, all the way up here about 161, 216. And if not, if the market, keep in mind, the market could melt up here. Anything's possible. And then you'd see treasuries go back down. But as of now, like I said, it's not I don't have strong enough convictions to add this as an official trade, and nor should you let it get away from you if you're in it. And you've made a few bucks already for sure. Treasury, especially ZB, it's pretty highly leveraged. Right now, it'd be ideal to see ZB stay above this level here, about 156, 278. I see resist or support there. And all right, let's move on to that. Let's move on to gold. Get back to gold here. Same story. Gold broke out. One of the positive divergences down here. Divergent low, breakout, and it's been walking its way up. This looks like, to me, most likely, wave one up, even if it's just an ABC corrective wave. The waves have been, I'm not going to try to apply Elliott wave to this. This is where, good luck. If you're an Elliott waver, I do see some value in that. And all disciplines, they wouldn't exist if there wasn't something to them, but that's not my cup of tea. Anyways, the bottom line is gold has been in a 3+ month sideways consolidation range, slightly working its way down, but when you step back on the long-term charts, again, it's in a bull market, and this appears to me to be a corrective 3-month consolidation period within a bull trend that will most likely break to the upside. So we're at the bottom of that trend now. Either way, I'm still favoring some more upside from now, but like anything else, if you made a few bucks on this, don't let it get away from you. At least set a stop at entry to show a break even. And I wish I could give a hard buy on it right now. I just can't. In fact, somebody asked, a member of the site in the trading room asked my take on CDE and AG. Those are two silver miner stocks. They might, a lot of the silver and gold mining stocks, they pull both out of the ground. You're not going to start digging into the earth and ignore the gold if it's lying next to silver. So a lot of these companies, they have exposure to both. But I think, from my experience, CDE and AG, I've traded these for years. I think they're more skewed towards silver mining. And anyway, so here's my thoughts. They're in here. It's in the trading room if you want to, when you go into the trading room, if you're new to the site, just click on my either my username or Gravatar there, and it'll load all posts that I made. You can also follow me, so then you can go in and sort, come here, and if you're following somebody, click on that. Whoever you're following, you can sort and see only their activity. And here's the thing. And I said this, and I'll try to summarize it quickly. My outlook hasn't changed. I've been longer-term bullish on gold for at least the last 2 years or so, and still think we're in a consolidation period. But I can't, I've done this long enough to know, don't ever become married to any one position, that the market or gold or anything must do this, must do that. And so pretty much I said, look, we're going to need to break. We're in a consolidation range. It's been sloppy, sideways, going on for a little over 3 months now. And then, if we break above it, like I think, then you'll have your next buy signal for these mining stocks. And that includes GDX, by the way. And I'll tell you, the birds of a feather flock together, especially in this sector. Some sectors, like biotech stocks, for example, there's a lot of diversity because one biotech company might be working on a peanut allergy drug. The next company is working on, cannabis derivatives, and there's no relationship, and one may have get approved for clinical trials by the FDA, the other may get shot down. So you see a lot of disparity within biotechs, but I can tell you this, gold and silver miners are all doing the same thing. They're pulling gold and silver out of the ground, so the price of gold goes up, they go up, with a very few exceptions. I could just tell you there's a high correlation. So it's pretty simple. You want to know where the miners are going, you just have to figure out where gold's going and silver. And so that was my answer. I showed, an AG back in early July. Somebody inquired about gold mining stocks, asked for some of my longer term picks, and I said, actually, I think the silver miners are going to outperform. I think they're potentially poised to outperform. I listed, I think it was 4 of my favorites. This was one of them, AG, same one that William had asked for in the trading room. And you can see I had my targets. It needed to break 829. We're just below. We had just broken out of this downtrend line, had it going up to 1344. And then, get a reaction. That's where the arrow breaks mean, a reaction on that level, and then 24. That was several months back, and here's what happened. The stock went on. It didn't just break 829. Look at that massive green candle. That's the biggest green candle you had probably all year or in years. And what does that mean? It just validates 829 as a very important resistance point, because the buyers stepped in, and you had an impulsive breakout, which also confirmed the breakout. Hit my 1093 target at that point. Let's see, did I have that one back then? No, I didn't. I added that one afterwards. So my mistake in that post, I always add levels to my charts. I guess I didn't have that at the time, so I stand corrected to what I said in there. I just noticed that right now, but it is a level I added afterwards based on reactions right there. And so all this is incorrect. If I didn't list 1093, I may have added it since. But we hit that level regardless. We hit it, and this is updated today. You see we've been consolidating and had several tags of it. And see this trading range? That's the same as gold and silver. Gold and silver are in those multi-month trading range. That was a weekly chart we were looking at. Here's a weekly chart. This is not coincidence. These charts, you could almost overlap them and they mirror each other. And so, again, same story. It's very simple to me. The next big direction in gold will most likely be determined by which way this breaks. If we break to the downside, there's big support. 130 to me was a very, very big, important resistance level I harped on for a long time. Said when that gets taken out, that's a big buy signal for gold, and it was. And therefore, well-defined resistance and very significant resistance back then, once broken or taken out, becomes support. So if there's a downside break in gold, it'll probably coincide with a blow-off top in the stock market if we saw that. And there's some downside, but it's not huge. Doesn't mean we have to stop there, but it just means I think most likely it would at least get a reaction there. And so if we break down, at least initially, at least down to 130, it's not going to eliminate my longer-term bullish scenario or outlook. It's just a level that I might look then to position long right now, or I wait for a breakout above. Or you, like I said, the third option is scale in down here. We're at the bottom of a trading range. You can be accumulating if you're a long-term investor, accumulating here with a stop somewhat below. If it breaks, you're talking 8 points on $138 security. That's less than 8%. What is it? Probably 6 or so percent. That's not too bad. Now you can, long-term investor shooting for, my targets up there, my longer-term targets about 174. That's 27%. You can easily allow for a 5-6% stop loss if you're targeting 27%. So to make it very simple, a long-term investor could be. I don't think it makes sense to be all in here, but you could be buying here and continue to scale whether we break to the upside, or scale in whether we come down to 130, but not below. If we go much below that, at that point, I'd step back and then be more concerned about where to cut your losses in case gold's going lower, meaning stopping out. And the other trade that member had inquired about, or stock, is CDE. And here's one. These guys have been moving up, and so when I highlighted gold and silver recently, again, it goes without saying, if they're going to rally, the miners are going to rally, and we've seen that. And this one's actually been pretty strong recently. And this is a weekly chart, and just the last, 5 weeks, this sucker's rallied about 47, no, more than that, 55%. However, it is coming up to a pretty significant resistance right here, about 674, maybe a resistance zone. I probably should and will add a line just above that, because I'm eyeing this level right here. A lot of reactions at this point, so we'll call it a resistance zone. But the bigger picture is it just broke out, and this was a well-defined trend line. Look at this trend line right here. We had a downtrend line. Now I'm going to say this: these breakouts in the miners only going to go so far without participation from gold and or silver. This one's listed as gold, but again, I think CDE, if I'm not mistaken, I believe they're a little more heavily skewed towards silver. But there it is, a bullish breakout, bullish price action, rallying even without gold and silver. But again, probably only going to go so far. if you doubt that, then you just have to overlay gold and silver and look at how they've done over the years, and you can see there's no mistaking the correlation. I just showed you gold and silver. Look at this. They're not going to track cent for cent. You get more bang for your buck with the miners because they're essentially a leveraged play on gold and silver prices, because their profits go way up when prices rise, and they tend to fall more when they drop. But you can do this to just about any gold or silver stock. You're going to get the same thing. You can also see the gold and silver move together. One might outperform the other. They play a game of catch up, but piggybacking or leapfrogging. But the trends are going to be roughly the same. All right, I'll probably wrap it up here, even though I had some other trade ideas to show you, because we can keep this on topic, and meaning pretty much what I started out with, precious metals. I looked at everything but platinum. I'll get to that later. Palladium, gold, silver, and I did cover Treasury bonds because they're risk off. So they're going to hinge largely on this, and that's what I'll do. I'll do a closing market wrap today. Gold, the risk-off assets will depend on where this picks up next week. We got that back test right now. Remember in yesterday's video, I said nothing would change technically. Doesn't mean we can't go higher. Doesn't mean we must fall. But just from a technical perspective, nothing's changed with today's rally. It's more of the same. We're in an uptrend. We did break down. Now we've simply back tested the trend lines from below that were broken recently without really any impulsive selling, nor did we take out those levels just below that I said needed to get taken out to really get some selling to the downside. So where am I going with all that? Well, whether or not those risk-off assets, whether it's just a dead cat bounce, and that's about all there is to be made in gold, silver, treasuries, since I started highlighting those a week or two ago, that will depend most likely on what happens from here. If these guys rally, continue to go up, take back the trend lines, take out the divergences, we have a blow-off top, you're probably going to see gold, silver, and treasuries drop. So that's why don't get married to it, but I am still leaning this way. And if that happens next week, we start to see the market pull back, then we probably see a little more upside in gold and silver and in the precious metals. All right, we'll wrap it up here. Let me get it out to you guys, and then I'll follow up with some other trade ideas that I'm looking at, and I'll also do a closing market wrap video later today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.